Welcome to the Asia Climate Finance Podcast, where our host and expert guests delve into and scrutinize the pressing issues and emerging trends in climate business and climate finance. We greatly appreciate your support. Please like, review, and subscribe to the podcast to help us grow and reach a wider audience. Be sure to take note of the disclaimers at the conclusion of each show. And now, here is your host, investor, analyst, and author, Joseph Giacobelli.
Hello there, and welcome to episode 55 of the Asia Climate Finance Podcast. This episode is a little bit different because we interview the CEO of a US-based cleantech company, which has got ambitions to take its technology abroad, especially the Asia-Pacific region. So it's a little bit of a different conversation than we usually have. So in this episode, we dive into the fascinating world of eco-friendly mining technology with Don. And then he shares the company's unique hydrometallurgic process, which is more environmentally sound than traditional mining and smelting. We discuss the market for platinum and palladium, the potential for growth, and the challenges in the recycling industry. Don also reveals his company's journey from a junior mining company to a pioneer in catalytic converter recycling. We also discuss its fundraising approach. So I start the conversation by asking Don a little bit about his background. Enjoy the episode.
Sure thing. So I began my career in the accounting industry, but always was more of a hands-on field type person than just the numbers and sitting in the office doing that sort of thing. So always was interested in making sure I understood and picked apart what the business was. Started with a coal mining company and wasn't even sure why coal was still being mined. Moved into the Alberta oil sands and then transitioned to Regenx, which when I started was a junior miner, and it had an opportunity to move into eco-friendly technology. So it was a great fit to be getting into something that was still mining related, but it was moving forward into a new technology area. And so it gave me a lot of interest to move into that piece.
That's great. You mentioned the company that you're currently CEO of, Regenx Tech. So maybe a couple of words on the company and what the company actually does.
Sure. The company now, more from being a junior exploration company, through some material processing, led us into the catalytic converter recycling market. We were approached by Davis Recycling, who had an opportunity in catalytic converters, specifically in the diesel end of it, to recycle platinum and palladium from end-of-life catalytic converters. Regenx has a proprietary hydrometallurgic process that breaks down the honeycomb structure of inside a catalytic converter and strips out the precious metals, platinum and palladium, so that we can use those in the commodities market.
Wow. And we'll get into some of the more nitty-gritty details about the whole process in a minute, because I'm absolutely fascinated by that. Just in terms of macro questions, for those like myself who are not experts in the field, what exactly are the principal precious metals key to the energy transition, and why are they precious? I mean, at least the precious metals that you're involved with.
Sure. So we're involved with primarily platinum and palladium. Mm-hmm. Platinum and palladium can be interchanged and used one for the other in most applications. They're precious because they're some of the most rare elements in the Earth's crust. So there's not large amounts of deposits of these precious metals. But they're also precious in the fact that they can be used in two sort of complementary ways in energy infrastructure. The primary use right now is in catalytic converters and uses their oxidation potential to convert smog-related gases into less harmful emissions. like converting carbon monoxide to carbon dioxide. So they're an oxidizing agent in those fundamentals. But alternatively, they're also conductors. And there is a large role in the future, especially for platinum, for its use as anodes in fuel cells. So they are on both sides of the energy market, one on the fuel cell side, but also on the emissions control side.
Got it. In terms of the market, if you could, how big is the market right now in dollar terms, and what's the size likely going to be like by 2030, by 2050? Is this a growth area?
Right now, the platinum and palladium, there is currently 17 million ounces used annually. But $1,000 an ounce, roughly, you're talking in the billions of usage. Of that, about 35% comes from recycled sources.
Oh, wow.
So again, the growth side of it, like I said, catalytic converters have been increasing. That growth was started in the European market, followed quite quickly by the North American, the EPA, US side. But now it's also being highly driven in Asia Pacific. China's regulations have increased substantially. So the usage of catalytic converters is a worldwide issue, and the demand for the precious metals has been growing substantially. Longer term, the demand for catalytic converters is probably going to decrease because of electrification of vehicles. But that electrification, some of the projections of how it could be 80% by 2040, well, those things aren't just happening. So increased regulations, lower rate of uptake of electrification are going to continue the demand for catalytic converters. Also, you've got the substitution. One of the major electrification outlets is going to be fuel cells. So the fuel cell demand for the PGMs, platinum group metals, projects to have more required platinum than is currently already in use. And just for people's knowledge, the majority of the supply, like 80% platinum and palladium, comes from two sources: South Africa and Russia. So geopolitically, the concept of increased supply from mining is probably not one that you can count on. This increase of requirements is going to have to come from alternative recycling.
So right now, only from South Africa and from Russia
not only, but 80%. 80% of the supply comes from those two locations. There's some in Zimbabwe, but your vast majority is your South African and Russia sources.
Got it. In terms of the recovery of platinum and palladium, is it environmentally sound? Is it sustainable? And what are some of the environmental and sustainability challenges?
There are three sources mainly right now. There's mining more out of the ground, which isn't sustainable. And the recycling is broken down into two fundamentals. The majority of recycling is done through smelting. The majority of the smelting takes your gasoline engine catalytic converters. Smelting, those who aren't sure, is fundamentally just melting at very high temperatures to break down all the elements into their separate pieces and burn away any of the undesirable pieces. Projections we'd heard is sort of a smelter creates about 1,500 kilograms of CO2 for every ton it processes. The last opportunity is what we've moved into called hydrometallurgic recovery, which is chemical leaching. And so we use chemistry to break apart the elements and then create a dirty concentrate, a black powder, that we have an upgrader just brings it to purity. So our environmental footprint is very small as compared to mining and smelting.
Got it. And that segue is to talking a little bit about Regenx Tech and the process and technology. Again, I'm not a scientist or a mining expert, and probably most of the listeners will not be, but could you just tell me a little bit about the brief history of Regenx? I mean, when were you founded? Where are you at your development stage?
Sure. So we have a long history of our company. We were fundamentally a junior mining company. So we were one of those companies that found properties, dug holes, finding more resources, trying to build up a resource, and then, either bring it to being a mine or sell it off to someone else. And back about 2015, we had sold one property, and we're looking around and saying, okay, so how do we reinvest this money? And the concept of finding another property and digging more holes didn't hold a lot of value for us. We started looking at alternatives, and we were introduced to a material processing technology with capabilities to recycle water. And it was going to be used to reprocess tailings, especially at gold mines. What was uneconomic to recover 100 years ago could be recovered with current technology. So that was the genesis of what we were going to move into. We got approached by different groups of saying, okay, you can process material. Could you do it in e-waste? And we were down that path. And then like I said, with Davis, asked, could we do it with catalytic converters? And so in 2000, we started lab testing the catalytic converter option. And so to move from lab scale to a pilot plant and to the design of a commercial plant, we've built the first module of our commercial plant in Tennessee and are bringing that online, producing at a commercial scale. Our module 1 is projected to be operating at 5,000 pounds a day of feedstock. Right on that edge of being a full-fledged revenue-generating company.
Got it. So just to step back a little bit, because maybe I misunderstood the year. You started getting into catalytic converters area. Did you say 2000 or?
2020.
So for the last 4 years, you've basically been building that up. And the module now, the first module is just about to be commissioned. Is that correct?
Well, it's commissioned, but we've had, like any technology, new technology, you take 2 steps forward and 1 step back. So we've been right on that cusp of being fully operational for a little bit here. We just keep our operation.
Short term, you're still basically testing, optimizing, and you think maybe 12 months from now, it's going to be...
we're looking at next, in the new year here, we should be fully operational.
Right, so Q1, great. And just again on that, in the presentation that I saw from the company, there was a statement, recycling of diesel SiC converters is underserved market. Could you clarify and expand on this particular statement?
Sure. There are 2, in the simplistic terms, 2 types of catalytic converters. So your gasoline, which are based on a ceramic honeycomb. And to break it down, a catalytic converter is like a muffler, but inside the muffler is a honeycomb. And it's a very porous, a lot of holes to structure that's coated with your precious metals. And the concept is that airflow from the engine flows through this honeycomb, and you want the air to flow over as many surfaces as you can to create that chemical reaction to convert the smog gases into less harmful gases. So the gasoline converters are based on ceramic. The diesel ones have a honeycomb that's based off of silicon carbide. SiC. Silicon carbide is in the diesels because they need to run hotter. And so they need a more robust honeycomb. The dominant recycler is a smelter that melts them. So if you're throwing in this more robust substrate into their smelters, they get operational issues. They run less efficient, all these issues they have with processing silicon carbide. So they prefer not to run that at all. A lot of smelters even reject outright silicon carbide. So there's a group of these diesel engine converters that don't have a home to be recycled at this point. And our process is designed to run those effectively.
You mentioned earlier that there were two ways of doing it. One is the way you guys doing it, and the other way is the smelting, which I presume is extremely energy intensive. How energy intensive is your own operation?
We are very low energy. The major energy that we have to do is heat our formula up to about 90 degrees Celsius. So we're not even bringing our formula to a boil. So the energy required is much, much less than anything involved with the smelting process.
And for the little energy that you're using, are you using currently clean energy, or you just have to use whatever the grid offers you?
We're using natural gas.
Got it. And
for our heating.
Are there any long-term plans to kind of convert that into clean energy?
Well, natural gas is one of your cleaner burning pieces, and it's one of the most efficient ways to heat. So for now, we're going to probably be utilizing that option. Most of the other pieces, when you have to use electricity, you're a lot less efficient on heating than you are on a natural gas.
Not knowing much about this particular space in general, I'm formerly a utility analyst, so I'm more on that side rather than mining-related segments. Could you tell me, are there many firms in the US or anywhere else around the world that are doing something similar than what you're doing?
We're the market leader in this one. There are some other firms around the world, one out of Australia, one out of Spain, one out of Canada, that are entering this market space. But they're all still at the lab scale, sort of the testing laboratory baseline. This is a two-pronged problem. The chemistry is probably the easier side to do. There's a chemistry problem and the mechanical issue. It's a processing problem to move this material through different segments of the process effectively and efficiently while it's changing states. You have solids, you have liquids, you have slurries, you have all these different temperatures, you have different chemical compositions. So moving it around your process is just as much of a technology advancement as the chemistry side.
Well, one more question about the company in general. In the medium to long term, are there any avenues to expand further than the US? I mean, going overseas, going to other countries, and if so, which countries?
Oh, yes. This is a worldwide industry.
Right.
Wherever there's cars, there is opportunity.
Right.
One of the fastest growing areas of vehicle penetration is the Asian Pacific market. China is the highest growing area of additional vehicles. We look at this as the U.S. market being our starting point, our springboard, that we then, once we have enough product, we'll be looking to move out globally.
If I can go back with another, maybe more general question. In the Asia Climate Finance podcast, we haven't had a lot of opportunities to have pure clean tech companies. We've had people talking about solar, people talking about wind. We even had ocean energy as one of the subjects. But in terms of the development stages, you started looking at it in 2020, now 2025, you're ready to go for full commercialization, and it may take 1 to 5 years for you to reach the whatever scale you want to reach. During that period, in terms of financing, ideally one wants patient capital, people who are not going to be calling you up at midnight and say, "Oh, how's the equipment going right now?" So, were you able to, because you're already a listed company, so were you able to get some patient capital, or you basically just have to deal with the stock market investors, which by nature are more short term because you're dictated by quarterly earnings?
So we've relied on the stock market for our financing for the history of our company. Our core shareholder group has been extremely dedicated, loyal, and helpful. And I understand some of their frustration of wanting things to happen faster, but they've shown a lot of trust and faith in us as we've moved forward. It's been less on quarterly earnings because we haven't had earnings, more so on the story of development and how we have shown what we want to get to. We've had loyal and patient investors in us, and we've gone to them a few times to help us raise another level of financing. In fact, we've done a couple rights offerings where we've allowed the long-term investors the chance to get discounted shares to maintain their position instead of bringing in new groups who get to share in the big with diluting the long-term groups. There's no great way to do it, but we've been pleased with our investment group.
Yeah, and the reason, I guess you can guess where I'm coming from, because typically a clean tech company with a developing technology, you're not listed, you do your series, whatever, and then that's how you raise funds, and you have a lot of patient capital involved, which gives you a little bit more leeway. So doing that as a listed company sounded to me quite challenging from that managing expectation.
I would also look at what our model is, and it's the same one as the clean tech can be looked in the same way as the mining exploration model. That mining exploration model that's well down the path of publicly listed companies, you need a lot of patient capital for that. Because you're going out, finding a property, you're digging holes in grounds, you're proving up your resources, you're moving the project forward and to revenue generation. It's the same business model and it's the same investment thought process as a junior miner. The clean tech space is that you've got the concept, you've got to do the work to develop your business and increase your ability to move forward by investing in development.
That's a very good point. It is a very similar business. Yeah, that's great. I think I've already abused too much of your time. Are there any conclusions or concluding remarks, especially in terms of the long-term outlook of the company and the industry, that you wanted to mention?
We're excited with where we are, and we see a great opportunity in front of us. Short-term, long-term, there is a great potential for what we are offering and for where we're positioned. We believe that we are going to be leading this industry well into the future.
That's great. And hopefully we can catch up 12 months, 18 months from now and see where you're at and how the development is going. Thank you very much for your time. I really enjoyed the conversation. Sorry about the simplistic questions from me.
No, there's never a simple question because it always digs deeper into what you're doing.
Got it. So once again, thank you so much for participating in the podcast.
If anybody's interested in following us, we're listed on the Canadian Exchange under the symbol RGX and the US Exchange under the symbol RGXTF. Our website is www.regenx.tech.
Great. That will be in the show notes as well, so people can get the information from there just in case they didn't write it down. Thank you so much for your time, Don.
Thank you.
Thank you for listening to this episode of the Asia Climate Finance Podcast. Please be advised that this podcast is presented for educational purposes only. None of the information provided should be construed in any way as investment advice. Always consult with a licensed investment professional before making any investment decisions. Additionally, please note that the views and opinions expressed by our guests are personal and may not reflect the views and opinions of their current or previous employers.